Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, February 20th, 2024. It's 1:30 p.m. on the button as I'm starting the video, so we've got another 2.5 hours to go in the trading day. Wanted to get one more out to you. And this is what I tend to do is I'll pick up analysis and coverage of updates on trade ideas, more videos, when volatility begins to spike. Remember, or at least myself as an active trader, that's when I'm, make most of my money. When the VIX is at lows, record lows, or at the low end of its range, that only means that the market is in a slow and steady grind higher now. And 401ks are doing great, but again, the site is mostly about swing and active trading. We'll cover long-term stuff, and hopefully you find some value for managing, positioning in long-term IRAs and 401ks. But most of the updates here again are active trades, and so I'm going to pick up commentary when we see that. So we see the VIX starting to climb as I've been talking about for the last few weeks. It was setting up; it's not random, and we see volatility spiking in the markets. So let me just throw out here some of the things. What I wanted to do in this video, and I'm going to start out with, and we'll look at a few of the replies that I made to some comments today, but this is very important, especially for those new to the site. I wear multiple hats myself. I am an active trader. I'm a typical swing trader, even a trend trader. I have long-term accounts, IRAs, and college savings plans, and then of course a trading account or trading accounts. And so I do my best to differentiate between what is a short-term analysis, what may be good for those that like to actively trade, and then those who are typical swing traders. Maybe you don't have the time to do this full time, or maybe you do. Maybe you're retired, you just don't have the inclination to sit in a chair for 8+ hours a day and watch thousands of streaming quotes and dozens of charts and all that stuff. Okay. Just to define that real quickly, there's no hard definition, but typically I refer to, typical swing trading or swing trade will usually last at least a few days, but the range is usually from a few days to a few months, with an average being several weeks. It's no hard number, but let's just say 4-6 weeks is a typical swing trade. A lot of times I notice a lot of my swing trades, at least the initial targets, get hit much sooner than that, but again, the whole thing will play out over that. So again, it's not a hard definition, but then when I refer to, of course, trend trading, those are trends. You're trying to catch a larger trend that may go for months or even years. And then you have active trading. Day trading is a subset of that. I don't differentiate. A lot of what I trade are futures, which trade around the clock. So there is no really end of day there. You have liquid trading at 3 a.m. on the NASDAQ 100 stock futures. You can set stop losses, you can set buy orders. It'll trigger, if you have a breakout in the middle of the night and you're sleeping, boom, it'll put you in there if you set that order to buy on a breakout. So I will speak to those and share those active trading ops, but very important. If you're new to this, or maybe you've been doing this a whole long time, but that's just not your wheelhouse, ignore that. Maybe take that and you might find some value entering or exiting a longer term position, if we hit a key support level or resistance level or a breakout of a pattern. Okay, so hopefully that's clear, and so I'm going to talk on that in this video. But a couple other things I wanted to cover, that is this. I got this chart out to you. My typical swing trading time frame, my go-to charts are usually the 60-minute, and quite often I'll cover the 120-minute charts, meaning every candle instead of 60 minutes is 2 hours instead of 1 hour. And that's what I've been focused on here. And I got those charts out to you before. And like I said, I ever so slightly tweaked this target from where I had it a couple weeks ago, because I was coming in and sometimes when we get close to those targets, I zoom in and I really look at, okay, where are the lines? And then I'll also, for example, this is a 120-minute chart, so this is what I did. I had to tighten it up a little. I had it a little sloppy and loose, so we hit that today. The lows, that's the target. I expect a reaction. We've already had a reaction. Again, this is a 2-hour chart. You look at a 60-minute chart, and again, you can see it here. I have it at 17,463. And again, why is that there? Well, it's these reactions. It was support there, broken support, went down, hit the trend line, bounced, came back. There it is. We also have positive divergence. So this is Something that gives me pause. In an uptrend, you want to buy pullbacks to support, and all the better if you can buy those pullbacks to support with positive divergence. Now, in a strong uptrend, you're not going to get that on the daily chart. It's usually on the intraday charts like this, the 60-minute chart. So, this has the potential, this divergent low at support, to be the catalyst for the next high leg up. So let me just throw that out there. There's no way to spin it otherwise. Now, for the bear case, you want to see these get taken out. So I'm going to go over this. What I'm doing is showing you everything I see. There's always some contradictory evidence to, go to enter a trade. Like I said, you want to, it's like the debate team in high school. I was never on that, but let's just say that you give me one side of the case to make, bullish or bearish, and I'll do it at any point in time. You pick a stock and I'll tell you the bearish things I see. I can tell you the bullish. But I do my best to not be wishy-washy with you. When I am wishy-washy, I tell you. And I say I don't have much of an opinion. I get that all the time. But, at the end of the day, I take everything collectively and, I'll tell you which side I'm leaning towards. And I'll also do my best to convey how strong or not strong my convictions are. Okay, right now they're pretty strong. They've gotten stronger in the last couple of days on those swing shorts. And I'll get to that in 1 second as to why, but I did want to, again, point this out. We're at support. We're pretty oversold today. Let's look at QQQ. So support on SPY. This is a 60-minute chart. I'm sorry, not SPY, NQ. And then the ETF version is QQQ. So here it is in a nutshell. Again, this is kind of recapping what I said today. So first and foremost, we have the next sell signals I've been waiting for, which are, just to go to my clean boards, break of the primary trend lines off the lows in QQQ, SPY, everything else. And I covered that this morning, so let's not go through each of those charts. There it is. Now we only have, like I said, 2.5 hours in the trading day. So, it's certainly possible we can reverse and get back above there, but I think it best to back test. So, I laid the case out just before this video for active traders if you want to game a bounce off that support level. I just wanted to show you that this overrides or supersedes. So I'm trying to speak to that whole swing and active trader thing. And let me go here. Let me go to this. Great question. Okay, NVDA. Yeah, a bunch of people jumped on that. I was talking last week. I knew it was Wednesday. I even had it marked on my chart. I just in my head, because yesterday was a holiday, some reason it kind of moved forward to Tuesday. But I did address that in the after when I posted the video. It was below the comment section. So yes, NVIDIA reports tomorrow. But since I was already on this one, let me bring up. So yeah, I addressed that in the post above. All the better as the nervous NVIDIA longs are starting to bail today. So as of now, depending on what the stock does before the close tomorrow, I might be able to book some quick gains and partially or fully close that position out before earnings. As I told you earlier today, I plan to most likely now ride it in, but I don't have now. I have an extra day to make that decision. So what does that mean? I mean, get already, what am I up? 6% on that one. Already 1 day. That's not bad. Take a 6%. It's a pretty good size position. It's worth it. But at least I have now until another day. And I'm also actively trading the NQs. So at the very moment I speak to you, I am long the NQs after, when I got that post out to you, expecting a, reaction off that level, covered and reversed. So far it was at the lows. We'll see, but we're right back. We're barely above that level now. So, but my point there is I am indirectly hedged that if all of a sudden they come in and buy the NASDAQ 100 and the semis today, and NVIDIA and SM, what's that other one, SMCI starts to catch a bid, then, I'm indirectly hedged at the moment. But here's how I work. By the time this video is over, maybe shortly after, whatever I see something in the charts, then I'll throw that away. And I'm going to address that again in a second. So that's active trading stuff. So I just wanted to say that gives you a little more time. Let's see. So went on to say, however, not only did NVIDIA break down below that 24 uptrend line I was highlighting, I covered that earlier, guys, which is a sell signal, albeit a sell signal to be taken with a grain of salt as it incurred just in front of earnings. I talked about that before. I believe even when Amazon broke down pre-earnings back, and I told you it was a breakdown, but I'm not shorting it on Amazon because it was right in front of earnings and boom, it went the other way and it would prove to be a false breakdown. So just know that the odds are increased. I happen to think this one will stick in the move out of earnings. Even if the initial reaction's a pop, I do believe it'll drop. But I'm not married to that. I already talked on that earlier. So just wanted to say, go on to say that we also have SPY, QQQ, and SOX. Those are the big three I've been waiting for. They all took out those key trend lines off the October lows today. So right now, and I'm going to cover this again, that is sell signal number 2 over the last week. Remember on Tuesday, was it? Monday. Last Monday, we got the short-term trend line breaks. That was our initial sell signal. And I said an active trader can initiate a position there, even a swing trader. Active traders would want to cover the bounce like I did, and the initial tag, whereas a typical swing trader, that's, let's say you're scaling in, building a position. That's maybe a 1/3 position there, 1/3 when the trend line goes, which it went today, and you had plenty of time earlier. That's sell signal, their second lot, or a 2/3 position short. And then the final will come on that last sell signal I'm waiting for right now, which is a break below last Tuesday's lows on Meta, Amazon, SPY, and QQQ. QQQ already did it, but we need the rest of them collectively, as I said. Okay, just one more comment in that same thread there. Someone, you're using too much rational thought and thinking the video will drop after earnings. There's way too many MOMO, meaning momentum, and irrational traders out there. I'll bet it pops on earnings. No way they miss or say anything negative. I'd start shorting at 800 and add a little. Great, to each their own. I value everybody's opinion, feedback. I might take the different side of it, and some I reply. And I mean absolutely no offense by this, but I much prefer being the lone wolf when it comes to shorting a crowd favorite MOMO stock like NVIDIA, especially those type of stocks. I want to be the only one in the room shorting those. And so comments like this, in fact that it just can't go down because it's so strong, it's going up and everyone loves it, make me even more confident. So I appreciate that, and I don't mean that in any kind of silly or facetious way. It's just how I tick. Now, again, that's one of many positions. I'll manage it accordingly, and the very second I talk to you, I'm hedged against it pretty much indirectly by reversing those NQ shorts to long. Either way, here are some additional thoughts on the video I made in a reply to another comment. That was it. Okay, I linked to that. Let me give you one more here. Oh, and I went on to say, as always, this isn't a follow me site, so do your own diligence. Do your own due diligence and pass on trades you don't agree with. Very, very important. Okay, and more to that last post just before this video that I got out to you, that chart 17,454 support we just hit. Or I'm, as an active trader trying to game a bounce and think there's a decent chance of that. I said, I wanted to just check. It's in the comment section. A lot of times if there's something I need to add to a post, I'll go in there and do it in the comment section. So I'm not very confident NQ, assuming that it does bounce off this support level, will make it as high as the arrows show, which was 17,755-ish. Show it to you one more time again. It was on the 60-minute chart. That's right here. Yeah, it certainly could. It could go well beyond there. I don't know. I'm just showing you that was a solid resistance level. And if and when it gets there, I will almost certainly, if I'm still long, I will almost certainly be closing that long and reversing as an active trader back to short for at minimum a pullback and most likely the next leg down. So that's how I drew the arrows. But I'm taking this thing, as I always do when I'm active trading, 1 minute at a time. I'm constantly reviewing the charts, looking for something I may have missed or not seen. I'm looking at the market leaders, the Mag 7. I'm looking at the S&P 500, even if I'm not trading it. I'm looking at Treasury bonds. I'm looking at the euro, all of it. I'm going to kind of hit on some of those today here. So that's that. And so far, a little minor bounce, but again, nothing if you're, it's an active trading. You want to get at least, usually like to get at least a quarter or 0.3%, quarter point, 0.25% or 0.3. That's usually a minimum, and sometimes a little bit more. And again, if you're trading futures, which are leveraged, it's worth it. I don't have to tell you that. There it is on the 60-minute chart again. Let me move away from that. I wanted to cover a few more things. Okay, here's one. Good question. Let's say somebody went short at 9:45, so today, after the breakdowns. That would have been an objective entry, like I said, okay? So they're ahead. Should they maintain their short so through your so-called bounce? I don't believe it's going to bounce at all. But what about somebody who's short things, or Mag 7, the same from 9:45, so early this morning? So you're supposed to ride out. I can't tell you that, guys. I cannot give investment advice, but this is what I cover in these videos. So, and that's why I did my best to differentiate between active trading and in typical swing trading. But let me read this response, and again, this should help clarify it. So I did my best to address that in the post above as well as in a comment below, but here it is. Typical, which are non-active swing traders or trend traders, which I defined before, those that might come looking for the bigger move here, measured in at least high single digits or double-digit downside in the NASDAQ 100. Those typical swing traders and or trend traders might opt to sit tight on any short positions taken on either that first sell signal last week, which was the minor trend line break just off the highs, the all-time highs, and or on any position taken or added to on today's break below the uptrend lines off the October lows. So again, today was sell signal number 2 that I've been looking for. Maybe take you again, for example, to a 2/3 size position with appropriate stops, depending on. That's why I'm kind of got away from the hard suggested stops, because I'm especially with swing and trend trading, especially when trying to catch a major turn, whether it's a bottom or a top, I often prefer to scale in versus a hard all in. I will do those hard all ins, and I will tell you when that is. But right now, it's more of the momentum is there. I recognize that. The markets have been invincible, and therefore that's why I like this 3-tiered strategy where you can be pretty aggressive if and when Tuesday's lows are taken out. So likewise, the next and even higher probability sell signal that will offer another objective short entry or add-on for those scaling in or building into a swing position will come on solid breaks, and especially daily closes below last Tuesday's lows on the indexes as well as Meta and Amazon. Okay, that's what I've been harping on since last week. SPY, QQQ, Meta, Amazon, I'll take those out. There are no guarantees, but the probabilities shoot up pretty significantly. And then I went on to say all the better if that happens on Thursday or after NVDA reports tomorrow night, as a very positive and big capital letters and lasting reaction to NVIDIA's earnings. In other words, not just a pop and drop, has the potential to bring the indexes back above those trend lines, and therefore that would make this today's breakdown a false or failed breakdown. Okay, so hopefully that makes sense, and the timing would mesh well. So kind of where I'm at now, a little rally today into the close, maybe into tomorrow. Get those animal spirits back. The bulls have been foaming at the mouth lately. As I often say, if you've been a bull, and I know a lot have here and elsewhere, how could you not buy NVIDIA today when it's down, whatever it was, 6-7%? That's what you do. You buy a dip, and it's the biggest dip we've had in many months. But again, that's me. I'm on the other side of it. All right. For what it's worth, I have a fairly high degree of confidence that the rally is over. I'm talking the stock market rally, the one off the October 2022 lows. And not only, or really, the FANGs tech really took off January 2023. And not only is a new downtrend underway, but there's a good chance of a big drop this week and next. But that's just how I'm positioned, and I'm an aggressive trader, so to each their own. So now, but what I'm doing now, I'm trying to thread the needle, and I'm being just, again, I talk to you 1 minute I'm long, next minute I'm short, but in my active trading account, don't try to follow that. I used to use the analogy for years when Tom Brady was still playing that, it's kind of like saying, you send your kid to football camp and he's willing, somebody knows him, said, hey, he can sit there and coach you in the locker room or in the back office, analyze play, tell you what to do in each situation. Great. But he can't say, get on the field, stay 5 yards behind me and follow my every step, in the game. If I zig and zag, you need to do the same. If I look left, throw to that receiver. It's impossible. And that's you can't follow an active trader. It's the same kind of thing now. So that's why I spend all this time talking, giving setups, levels to watch in advance. And then if you want to start becoming an active trader, you just need to kind of incorporate that into your own analysis and look ahead, have a trading plan. If XYZ gets there and, looks like things are you're going to bounce, and you might want to cover short and reverse long. Otherwise, don't mess with that active trading stuff. Cut your teeth on swing trading or paper trading until you get the skill set and you have the full time to devote to it, because it is not a part-time thing. You cannot do this on your cell phone at lunch break or out at the beach. Anyways, that's that. Let me cover a couple more things that I haven't showed you. Let me jump over to this. This is kind of a random tangential move, but this is something that I don't cover every day because it's a long-term kind of building thing. I'm trying to zoom in here. Let me see if I can. Okay, I did my best. I'm trying to blow the chart up a little bit, but this is the margin debt, NYSE investor margin debt. So for those of you not familiar with what that is, when you open a brokerage account, if you open a non-retirement account, a regular brokerage account that's taxable, you have two options. You can open a cash account. You get a buy with what you have in there. If you put 100,000, they let you buy 100,000 of Apple or QQQ or SPY or whatever you want to buy, and that's it. Or you open a margin account, in which case you sign a rehypothecation agreement, which means you're allowing them to take whatever you have Apple, you're long NVDA, and your broker's allowed to take your shares and give them to somebody else, like me, to short those shares. And so that's how it works. They cannot, if there's not the shares to borrow from other investors, short sellers can't short anymore if there's no shares available. So now the benefit to you doing that is you can then buy on margin as well. And so instead of having 100,000 of Apple, you can buy with that, or whatever. I'm just using an example. You can now buy 400,000, and so you're magnifying your gains. If Apple goes up 10%, instead of making 10,000 on 100,000, you just made 40,000, but you only have $100,000 of your money in there. If that's how that works, okay, that's margin. In a bull market, what happens is animal spirits, as we've seen on this site lately, and you see on TV, grow and grow and grow, and people begin to believe that the market and stocks will go up forever, and that there's no much, that risk doesn't matter, and FOMO takes over, blah, blah, blah. You guys know all that, right? Well, there's a very clear correlation, and you can study in this, that you can pull these charts anywhere. This one's from Guru Focus, the website. And as you can see, it's growing steadily over time in a bull market. All of a sudden you have when the markets start going parabolic, and right towards the top, there's a parabolic advance. That's a parabolic advance. When was that? Well, you can see it was exactly at 2000. That was the end. That was the beginning, the end of the 1990, the great 90s bull that peaked in March of 2000 when the NASDAQ peaked, and the NASDAQ fell almost 80% from that point. And again, guys, these things repeat over time. And this is why I keep singing the longer term bearish song, despite the resilience of the trend. I have more and more indicators, more and more extremely reliable historical indicators. This one is far from a timing indicator, but you can get the gist. When was that? No, there's the top in 2007. So we've had really, in my opinion, two bear markets in the past, what is that, 20-something, several decades at least. The 2000 to 2003 when the dot-com bubble burst, and then the Great Recession in October of 07 to March of 09. And it's a clear pattern. And part of, if you're wondering why in those bear markets, if you lived through them, how did Apple go down 50, 70%, and Amazon, all these things are great companies. They would continue to sell a lot of iPhones and have services. Their earnings are still, they might contract, but and that's simply supply and demand. What happens is when everybody's leveraged up, which they are, that's where you get those sudden downs. And that's where, I get excited because I see a huge bear market come. I believe this is a bear market rally, and I believe it's getting close. And you can see when we had that first leg down, which to me was just the initial leg down in a new, much larger bear market to come. Look at the margin debt. So again, we had by almost all of my metrics, other than one or two call ratio, something here and there that did hit those extremes that typically mark at least correction bottoms. We never hit any of my bear market bottoms. I have the VIX. I have, there were some of my put call ratio measures. There was really very little, if any, there was lacking any technical evidence. I'm not the only one that's recognized that. Others have said the same thing. There was nothing that looked like or smelt like or felt like a bottom when the stock market bottomed in October of 2022. So what you can see here, I'll pop up here, is margin debt has gone again near parabolic, and it's much larger this time. And so what happens is when this ship finally turns, and what I look for are leaders cracking. So this is why I'm doing this video, and this is why it's so long-winded. I can't guarantee you NVIDIA is going to crap out after earnings. But what I can tell you is they're pretty much the undisputed poster child or leader of the AI bubble, lack of a better word, whether it's a bubble or not. That's what I'm going to call it. And so when that leader breaks, it's likely to take down the others, the rest of the lot with them. And so and when it does, it then becomes a vicious cycle. Selling begets more selling. And at that point, you want to short the highest flyers, the ones with the most hype, obviously overvalued, overbought. The Mag 7 should probably lead the way down, as far as, the market. The S&P could match the drop, but usually it holds up more. It has more steady Eddie dividend-paying stocks, but it depends if there's a problem with the financials. If there is, it'll be like the bear market in 2007 to 09, where both the S&P and the NASDAQ fell about the same. Normally, the NASDAQ goes up more in a bull market and drops more in a bear market, unless the financials. The NASDAQ doesn't have financials. That's one of the big differences. The S&P has a pretty good weighting. Okay, so just know that those are the things. I don't need to cover the NYSE margin debt on a daily basis. It's something that builds over time, and there's no, unlike the yield curve and things where you look for the uninversion and other things that trigger then the imminent, turn. This just goes up till it doesn't. But the takeaway here, it's just like, remember recently I talked about the jobs data, the job market, how we're at record low unemployment, and that's the bull case, and you hear it every single day on Bubble TV, how strong the job market is. And I've done this one in the past. I didn't have the chart queued up. You can look at it yourself. Look at when employment gets to those low levels, it never remains there relatively very long. And the one thing it always does from there, it turns, and it turns fast. It starts to really, it doesn't start creeping up the way it kind of creeped down to record low levels. It tends just like this. When the turn comes, it's a pretty quick turn, but in reverse. And so what happens, so you understand the inner workings of the financial markets. Earnings don't matter. Fundamentals don't matter. Selling begets more selling, because when you are, and I know a lot of folks are, this tells me they are, chock full of NVIDIA, chock full of Amazon, Apple, FANG, the FANG trade, most overcrowded trade, probably going to go down the history of the world, Bitcoin, other things like that, speculative assets, and there's that disconnect from fundamentals. Well, guess what? You might have diamond fists and say, you know what, I'm going to hold my NVIDIA. I don't care if it goes to zero over the next year. I'm going to hold it for 10 years. I'm going to tuck it away. I'm going to tuck away Apple. I'm going to tuck them all away. Doesn't matter, guys, when you have a margin account, because your broker is going to call you. They're not going to call you. It's on the computer now. They used to give a phone call, and you're going to get a warning that you're a margin violation, and they're going to warn you. And if you don't sell what you have, which everybody has, is the same thing right now. Again, I'm speaking generically, not literally. NVIDIA, Apple, Amazon, Facebook, Bitcoin. Your broker's going to sell it for you. They're going to do it to protect themselves. And so then this is why you have those sudden and swift and unrelenting bear markets when you get to these extremes, because it is the unwinding of the margin bubble. As stocks drop, that person that put $100,000 in their account and turned around and bought $400,000 in NVIDIA, and they're on cloud nine. Well, when NVIDIA drops the first 30%, they get margin calls. And then what happens? The broker tells them, you got a margin call, either sell what you have or we're going to do it for you. If they don't, they sell. What do you sell? You sell what you have. And so that's it. Okay, hopefully that makes sense. And, I may be getting 5 steps ahead of myself right now. This may be a conversation, again, I bring up in 6 months, a year. But the takeaway is, and I've done this long enough, that when it happens very fast. by the time you realize and by the time Kramer and company tells you that, oh, you better get out of the market or bear market, it's usually too late. Things have usually dropped too much. So again, the best guide that you can use is to determine when to act on it are the charts. And again, I gave you the levels. This is sell signal 1, 2, and then sell signal 3 may or may not come this week on the break of last Tuesday's lows. All right, a couple other things that I didn't cover today earlier, but in the last year or so, I've been highlighting on what I've nicknamed the big three. And that is the Euro-US dollar pair, which is really the euro is just the dollar in reverse. You can look at the dollar index only, you can look at euro only or Euro-USD. And so the recent lift we had here, we had a breakout. And it broke out on the 60-minute chart following divergent low and it's run up. It hit resistance today, but stocks aren't responding like they used to. However, I was also talking about this being the reason the stocks will go down because, again, if you're new, let me just turn it on real quick. And I have to go to FXE, which is the euro, because then it strips out the, let me just compare it to QQQ. Edit chart properties, compare to QQQ. Okay. So this is that correlation I'm talking about. It's unmistakable and it's been nearly immutable, meaning in whether it's the chicken or the egg, that's yet to be determined. This is QQQ right here in purple. This is FXE, the euro, which means when the euro is going up, the dollar's going down. And right here, you got a heads up. The euro peaked, dollar started rising because the euro was falling. Stock market didn't get the memo. We had another rally. It went down more. That was it right there. Finally got the memo. QQ, this can't continue, or at least until this trend disconnects. And so this is how I've been able to get in front of turns, whether it's bullish or bearish. The euro peaked right here, started falling. Stock market ignored it, finally got the memo right here and had a big drop right there. That was our big drop into the October lows. Some call it a bear market. I call it the first leg down in a bear market. Then we had a bear market rally. Well, you can see here the euro bottomed right there in advance of the stock market. Stock market bottomed after, and you can see the correlation. And so lately I've been talking about this big disconnect here. So yes, I'm acknowledging the euro has been rallying lately, but the stock market didn't get the memo. The euro had peaked here, it had fallen this much. That's a big disconnect. And I've been talking about these mean reversions. When, the market ignores something, again, a nearly immutable correlation, there's a price to pay one way or the other. Either the euro is going to have to continue to shoot up more to justify this move in the market, or that. And obviously, which one I think is going to happen. So I do have to point out that, we did have the recent breakout. The charts are constructive, but I'm putting a higher weight into the charts of the equity markets right now. And then there's, of course, which I cover almost daily now, the IEF and the yellow zone. So until and unless we move back into the green zone, I'm remaining, with a bearish bias, looking, that means to short breaks of support. We're still not that all in moment, but, getting there, and or short rallies into resistance. So we're still there. And that's about it. So, where, I'm, focusing right now where I think the biggest opportunities are. Obviously, if I'm short, NVIDIA and SMCI, I'm short the semis, and pointed those out, recently. We had that additional or new and even better sell signal today on the break of the trend line. Again, NVIDIA has the potential to undo this, make that breakout be a false breakout when they report tomorrow after the close, or likewise, they have the potential to build on it. So I often say, you want to keep it simple and not overthink this and suffer from paralysis by analysis. Then you take a buy or sell signal on what it is on faith. And if it gets undone, you have a solid close back above the trend line, that where you can stop out and realize it was. Otherwise, you can add to, and these are the stops along the way. It's where, boom, boom, boom. I have different targets on different charts, but so that's the semis breaking down, everything else. Okay, so yeah, semis, QQQ of the indexes, and IWM. Remember, let's not forget, I told you IWM was stretching it, but I stuck with that short trade. And all the better when I found out on Friday that same person that put me onto that SMCI said that it was, and then I did read that same article, that it was a huge percentage of the recent gains in IWM, an unusually large amount were attributed to it. And it was amazing. When you look at the market cap of it, I forget what it was, like a, oh gosh, it dwarfed everything else in there. In other words, it should be in the either the S&P 500 or the Russell 1000, the large cap index, but it's grown so fast they haven't rebalanced. The Russell 2000, the small cap index, only rebalances, changes out its components. That is every twice a year, I think, every 6 months. So that SMCI was a small cap, but then went ballistic, and attributed large. So that one single stock, and it's the same story, but in a more concentrated fashion of the FANGs, Mag 7 lifting the NASDAQ 100 and the S&P 500. And so, that kind of reaffirms. And at the end of the day, like I told you before, we're still, and we never did take out. I said, if you want to have a stop on IWM would be, the first stop would be above that previous high, that breakout. This was our false breakout. And I'm talking about the 199, 200 level right there. And so we're still right on there, but look, big divergence. We put in what I call an ADH, almost divergent high. We didn't equal it, but you have to zoom in so close. It was almost, for all intents and purposes, we'll call it an equal high. It was slightly lower. But here's an uptrend line we need to take out. And then if we do, I think that'll send us back down to, which is still my next trend target, or longer term swing, the bottom of the range there, about 163, and then ultimately down through the downside of that and resume the bear market in the small caps, which peaked all the way back in 2021. Let's not forget that, guys. Like I said, the stock market as a whole collectively remains well off its highs from, now well over 2 years ago. It's just a handful of stocks that have skewed a few unbalanced indexes, such as the NASDAQ 100, given this false guise of overall strength in the stock market. All right, one more thing I wanted to show you, and we'll wrap up. And that would be Bitcoin. All right, everybody's, majority of people, a lot of people, I should say, I'm sorry, are tripping over each other to buy Bitcoin because of these new ETFs that got approved, and that was priced in there. Initially we had a divergent high, and it sold off after the approval. Then we broke out of this symmetrical triangle pattern, and it ripped up to here. But I do want to point out it's looking ripe for a short if the market buckles. So if NVIDIA just poops the bed tomorrow night and the market then breaks and we get the next sell signals and we go down, being that this is one of the king of risk on assets right now, there was a time there where it was uncorrelated to the stock market, but it's back on as a risk on asset, meaning when the stock market's rallying and there's no, common sense and people, it's a FOMO trade and people are just buying because prices are going higher versus a fundamental and long-term outlook. That's when it does well. So I just want to mention it's got support. It's on it right now, about 51,528, give or take. You can see this little consolidation range, sideways range. Put in a divergent high recently, and this is negative divergence, that is. Just like it had a divergent low there and rallied, just like it had a divergent high there and dropped. This is how I trade. This is a hourly chart, divergent low, divergent high. And so because of that same thing I talked about towards the beginning of the video with the margin interest and everybody, being we're well into this rally's getting very long in the tooth, that means that people get more bold, less diversified, just put everything in crypto and Bitcoin. And I'm, again, metaphorically speaking, a lot of newer investors. We know the statistics show there's a lot of young, there was even an article about the number of teenagers in the market now, which is insane. And they're buying, that's what they're buying. They're buying NVIDIA and Bitcoin and high flyers and, meme stocks and stuff like that. So I just wanted to say that one could fall. And again, you can make a fundamental case for Bitcoin if you want. I'm not doing that here. I'm talking technicals like I always talk about. And coupled with the fact if we do get a big downdraft in the market, whether it comes soon or whether it's next year, you're going to see that margin bubble unwind and you'll see a lot of forced selling. And then folks that tend to leverage up on margin, especially towards And when a bull run is getting long in the tooth, tend to pile into those most speculative high flyers, and so they tend to come down fast and hard. So I wanted to share that as a trade idea. Break below, roughly current levels, and oh, sorry, I was trying to zoom in on the chart. I thought I had it paused. This is the actual crypto from trades on the Paxos exchange. And just so you can see, the BRR I just showed you, by the way, guys, it was futures. Those are Bitcoin futures. That's what I'll usually trade when I trade Bitcoin. But you can see, I just wanted to show you on the actual crypto, because the futures are going to price kind of like GBTC, which was that ETF-like instrument that was first to market, still out there, still trading, but that thing trades at a premium or discount to the actual price of Bitcoin. So I would want to show you, this is spot Bitcoin here. It's showing me the same thing. The level's about 51,350. And so we had a little punch through today, but again, it's a short I passed on, because at the same time I told you I'm covering shorts, because I think we're going to get a little bounce based off that level, and then I'm going to get short again. So on the next break, it'll probably do the trick. I don't even have targets now. If I do decide, it'll probably be more of a swing position if I get into it. I would like to wait until NVDA is out of the way. I don't want to get too crazy here on the short side in case things go the wrong way and we're looking at some blow-off type top coming. But as of now, it's looking pretty good, guys. All right, I will wrap it up here, and that way I'll get the video out to you long before the close. Probably the last one of the day. If I see anything that stands out, I will most certainly get it out to you. And otherwise, we'll pick this up tomorrow. This has been Randy Finney with Right Side of the Chart. Have a great day.